Good morning, welcome to Morning Outlook. This is Kim speaking on Wednesday the 10th of April. So the market's sitting there, the Forex markets in particular, sitting there waiting for inflation data to come out from the US. The data overnight, let me just bring this up here. No surprises for the New Zealand rates left alone there. Japanese inflation data coming in slightly less than expected. Well, that's their PPI data anyway. We haven't seen the CPI. But the more important data and what's everyone's sitting for. There's so many people waiting for it. I wonder if it was a bit of a damp squib. You know, it will come out, it will come in line, and barely anything will happen. But who knows? It is a complete guessing game. Anyone that thinks they know what's going to happen ahead of this is guessing. So we can only just play out what happens. Later on this afternoon, then we've got the Bank of Canada meeting, and we'll get their rate statement and decision. And it's more in their statements than the statement that will be more important than the decision. The decision, it's very unlikely to be changing here. It's whether or not they get a little bit more dovish. Okay, so that's lesser in interest to me. I'm really interested in the inflation data. I think it's going to be quite difficult to capture trades beforehand. But let's have a look at how the markets are set at the moment, what we could possibly get either way. As you can see yesterday, well, we ended up with a shooting star, ugly looking bars really, sort of giving and taking. It gained for a while, gave it straight back, it seems, but the pattern of these markets, up a couple, down back, and it's really not moved much at all. We had that little bit of movement on Monday afternoon there, and aside of that little step, we're really not moving too much at all, which makes it very difficult to select trades and very risky. And patience is a great old thing in these markets. The pound is quite similar in terms of what's happening here. There's certain aspects of this and the euro that suggest upside could continue. We need to see some poor old inflation levels coming from the US there. We start seeing it dropping, but we've already seen so much bullish content. It might be a bit of a difficult one, but if it does drop down and it surprises us, we could see the likes of the euro to pound absolutely fly. And well, fly either way, but it would be good if it flew in the direction it was actually starting to move here to the upside. A little bit sort of cleaner on the pound than the euro. That's all I'd say there in terms of trying to capture trades. It looks really lovely. In normal circumstances, I'd be looking here for a break of the highs of this break into the 8 o'clock and trading it up towards its R1. However, it's not normal. Sitting there waiting for inflation, it could just track sideward. The dollar yen is still sitting here with really no clear guidance from the Bank of Japan's governor who's been speaking. It's again, I think it's more hanging on what the US does than anything else. You can see this over a number of weeks now. Really not going anywhere too soon. So best left alone. Aussie dollar, this is picked up again. Picked up yesterday and stayed up there yesterday. Sits there largely slightly stronger. It's been helped in the past by oil prices, etc., commodity prices pushing up, gold prices pushing up, helping it all the way through there. Oil's come off a bit, but it's held sort of steady. But again, this one it pipped up in the afternoon there, and since pulled back into the range. It's got the hint of upside. If we got anything inflation-wise that was slightly lower than expected, again in the US, we could see this pushing up quite nicely, and it's one of the stronger pairings, so could be more interesting. US dollar CAD, I haven't really mentioned what happens on the downside. The downside could be just as I mean, I'm more suspicious on the downside with the US dollar. It's everything where we've seen the dollar do particularly well. It's not really reflected too long on the markets. We haven't seen an absolute move, and that goes through all of these markets here. So if the dollar data came out with really high inflation or much higher than expected, yes, we'll probably get a move. But what we've seen up until now is we've then seen that move given back. Non-farm payrolls, we saw a really big move on Friday suddenly there, but then immediately, almost immediately, it came back again to where it was. Now US dollar, Canadian dollar, still sitting around this. We've got this resistance level here around the 136.11 area, providing resistance. It's been holding this week to date. It's a real choppy old mess on the weeklies, looking slightly softer this week, and the dailies, well, you make what you can out of that. So of course we've got the Bank of Canada meeting later, so I wouldn't even try and second guess anything there. There's a slight expectation of a bit more dovishness, a bit softer approach on the with the Canadian dollar, so we'll see. They were one of the first to increase rates, so they might be one of the first to reduce them, but there's no expectation of any reduction today. The rates are expected to be left at 5% base rate. Right, the New Zealand dollar, again following the route of the Aussie, positive at the moment here. Again, this is market. All these markets might just benefit more on a lower inflation data than they will the other way around. But saying that, I mean, of course, some of it's maybe being priced in here. I don't know, but they're looking more positive. Just get this news out of the way. Okay, the Swissy. Well, the Swissy's gone into a bit of an ugly old shape here. It was never looking great on the 4-hourly, but the hourly was looking half decent yesterday, even when it was sort of pulling back down. But then it just came down too often. I closed out my long position on the break of the daily pivot here. I'll do some more analysis on it later, but it was basically we've seen lower highs confirmed. There was 3 lower highs confirmed all in that movement, and well, the S1 was lower than where my stop was for a starter. So the odds had changed, and it just wasn't happening. If it had pushed on from, we were looking at it around about 8 o'clock, it put up a nice pivot swing in there, never got triggered. But if it had pushed on from there, well, it could have been a lovely move up to its R1. Just didn't happen, and softened up at the moment, consolidating. Nothing there for me. Euro yen, just looking at a couple of cross pairs there in euro yen. If you can pick the euro, Swiss yen, let's have a look at the euro yen. Euro yen continuing to build again. Now this is where we generally get traders coming in with their shorts, but for now it's a risky market to be shorting against. Some traders will be perhaps looking at this thinking, well, it's not going to get affected by the US dollar, but I can tell you both these individual currencies are affected largely, and often one more than the other, so I wouldn't be looking to try and be too clever with these. A break above today's pivot would generally be a bit more of a positive move looking back towards the R1, but in this trend that we're seeing at this moment, but I'm not holding my breath on that one. Whatever markets I was looking at, I was looking at Euro Aussie. That's carried on the downside here. This is where the Euro's doing the Aussie's stretching its legs. It's pulled out another day. I've had smaller scalpy type trades on this, but not I missed out on yesterday's potential. It did actually roll over in the end. It didn't look great in towards its S1, but it subsequently moved onwards. It looks like it's maybe in a bit more of a trend, maybe this is an opportunity to be looked at some stage. It's air kissed the daily pivot today. Perhaps I should be looking this more on a swing basis for further downside. Anyway, there we are. That's the majors for now. Let's have a look at the price of gold. That's went into record highs yesterday again, run into its monthly R2 yesterday and reacted from that a little bit, but still sitting around there. The unrest is not doing it well. It's not doing any harm, I should say. All we're seeing is this continuation to the upside. I would not want to be trading against this at all, and I know some people will already sit there looking at it and thinking, well, I'll short that. It's how to lose money lesson number one. Trade against the trend that's pushing up and has got risk running with it. Yep, certainly at some stage someone might get it right, but for all those times you've lost, the psychological damage it does in terms of trading against something that is in such a upward move is foolish. But you go ahead, or just send the check to me, and if it makes you feel better, at least it's not wasted money then. Right, oil slipped back a little bit yesterday on potential potential discussions being held, etc., more so than anything else, or they are being held, but it came off yesterday. Again, as I said yesterday, I'm not in for trying to trade this at the moment. I'm waiting until things settle down a little bit and I can get into the moves. I mean, it did run off at 3 o'clock there and break down. 2 o'clock is my sort of starting point to watch this market, but I didn't want to really trade against this current trend anyway. So not for me at the moment. Structurally, it looks like it might be changing if we can break these lows from Sunday the 7th there. I could be interested more on the short side, but for now it's a long preference, but we could just get chopped up on it. S&Ps, get the right one, there's the S&Ps, the E-minis. Excuse me 1 second. Right, back. So two in a throw in on this. You can see on the 4 hourly it's at pig's ear and dangerous, and you've got to know when to sit out of things, and this is one of those occasions. Look, there's Monday, chopped all the way through there. Yep, sure, you can get into what you think is a great short or a great long happening, only to see it roll over on the very next bar. It's really not the place to be trying to trade at the moment, but there you go. That's the Nasdaq, sorry, not the S&P. Somehow it just slips back, but it's the same picture anyway. Right, the DAX. So DAX here is also struggling at the moment. We're seeing just these bit of a retracements. We might just see a bit more of them. This is now giving me another lower high. It confirmed another lower high there through that movement. And okay, maybe picking up a little bit this morning, but the way it's shaping up at the moment, I'd be more inclined to now, with the structural changes here, wait and see if we get a little bit of a break to the downside potentially. But there we are. And finally, the FTSE, for anyone that's following that, that's having a much better time at this stage, it seems, and is back on the right road to the upside. Again, I would not be looking to try and trade against this direction. Right, I'll leave it there. Leave it with you. If you want to go short in some of these markets, as I say, it's the quickest way to lose your account, but there we go. Anyway, have a great day. Wait for that inflation, and I'll catch you tomorrow. Bye for now.